So a week after the election, we're much better than we were at the low on Tuesday. We're 20 points higher than the high on that Tuesday night, which was around 52. We started that night at 42 even. I remember when I say started at not the open of that overnight session, but 6:30 Central Time is when they started first reporting. I thought they reported at 7 Central. It was 6:30 Central. So North Carolina or some of the East Coast states were going to start reporting. We were trading 42 even, and we were banging around like a 15, 20-point range. But late last week, I wanted to give guys and it helps me from time to time, is to take a step back and give yourself perspective by taking a higher time period chart, whether it's a 24 PNF instead of the 4, 6, and 8s we're used to, or some of the delta reversal bars that you guys use could also give you that perspective. And some of you guys are better at understanding stepping back than others. Some of you guys better than even me to step back and see some good levels that then you got to drill down to execute. But I want to bring in the guy that talked about it, George, from last week, just to talk about how he trades and looks at the high volume areas. And then I'll show you some things that I added to some of the charts that he had built with some of the algo stuff. We were making fun of the algo stuff earlier in the trading room, but just some of the simplicity of what we're trying to do. And like today, and this doesn't have anything to do with the chart I'm going to show you, but I want to show you just kind of a quirky bounce I thought we would have, and we did have, just because of these two markets. This is the Dow, and then Ed brought my attention in the session right around here. It was after 8:30, but before 9 o'clock. Home Depot was the driver of the Dow, right? It's a big component of the Dow. That was like 30 stocks. So a week in the white here is Home Depot. And this is the Delta profile just on Home Depot, not the Dow. In the gold here is the Dow, right? I don't know if you could see this because I got the overlay. I'll try to put the overlay as perfectly as possible, and I'll put it up here. But what I want to show you is, if you look at the Dow in gold, they splattered these lows which were right in here. If you just look at right there, that low right in there, they make a lower low and they smash it down to here in the first half hour of our session today. And the Dow was cooperating. This sell-off in the Dow, rather, the Home Depot was leading it. That was this sell-off in the white. And just the recognition of Home Depot had rallied 75 cents, and they were 75 cents below that low down in here, and they were trading in here somewhere, I want to say. And yet the Dow was getting stepped on, making lower lows. And it's just that example of, if the Dow looks like this and Home Depot, which was driving it, looks like this, that's a divergence way back from track 3. Is Home Depot going to give us this information every day? Of course not. It doesn't. But today it showed strength for places to maybe look for qualifying support and feel a little bit more comfortable that the leader wasn't as weak. And sure enough, where do you think Home Depot goes? Almost exactly to 126. The Delta profiles work in individual stocks also. That was the high in Home Depot, the high of the retracement. Now they've stayed weak, right? But early on when it's moving, when it starts to get slow, these divergences with individual stocks don't always work as well. But when both are moving fast, you like to keep an eye on the driver. And so the first time, and then I think it was the real best, the real good driver from today. And for those watching this on recording at some point in the future, today's the 15th of November. But then also we had a pretty interesting move in the biotechs and financials, and that was, well, first of all, the first half hour they both were weak, right? They both opened up and went straight down. Then we mentioned how the first bounce was right here in the biotechs. The first, if you're watching a market go down, the first kind of U-shaped, the beginning of a hook maybe, where you could say that might be the low. in an ancillary and you're a little bit more comfortable. And then the NASDAQ was driving us up and everything else. So the NASDAQ was really, really strong today and the Dow was real weak. So if you were looking to pick a bottom in the S&P, you wanted the NASDAQ to drive you to the upside and the Dow quit going down. And you got that sequence. I think it was right at the top of the hour, 9 Central. It was right at the top of the hour where you could look and you had that hook in the biotechs. You had the nice divergence in the Home Depot in HD Home Depot stock versus the Dow. And it was a decent rally in all markets. Just one thing to talk about and try to keep it. Now that's simple, but it's not simple, as you guys know, to the rest of the world. So Toronto, do you mind if I bring you in and make you a panelist here?
Oh,
Yeah, George, how are you?
hey man, good yourself?
Let me make you a presenter, or you can go ahead and share the screen on that 24 PNF. And
What a
also,
guy this Anthony guy is. Eh? Show me your chart so I can show you how I made it better. Love it.
I didn't. Yeah, well, that's what's cool is show me something and not make it better, but just help each other with it. It's cool stuff. It's cool.
No, for sure. That's what it's all about, right? At the end of the day, if you got something that I'm not seeing, I'd love to see it. So, I just wanted to talk a little bit about this new order type that I found, or a new indicator. If you guys if you're on CQG, this is one of the real things I'm excited about the platform. There's a lot of indicators and powerful tools that are available that we kind of glance over. I read through a lot of them. There's a ton of stuff out there, but this is one that I really like, so I wanted to share it with the group. And if you like it, you can apply it to your own trading. So basically what it's called, and I'll show you how to add it on the chart. We just go in here and just remove this. And you guys can see the screen, right?
Yeah.
Okay, awesome. So if you just click Control-Alt-D, or if you right-click and say Add Study, the same thing. It's called ALG-ORD, so it's ALG Orders. And if you add it to your chart, it adds these blue and green bars, and they're pretty amazing as to what they do. So this is a CQG proprietary algorithm that sniffs out volume in the market. So the way to look at it is, we talked about iceberg orders, I think, a little while back in the trading one, what an iceberg order is. It's where you display on the dome a certain amount size. Say you put only 20 contracts on the offer, but you're really looking to sell 1,000, let's say. So you're selling 20 contract increments that add up to the 1,000 total, but you never see more than 20 on the offer on the ladder. So that's kind of what an iceberg order is. It's hidden volume that wants to get transacted in the appearance of small size, so it doesn't get sniffed out and get bad fills. So what this algorithm does on CQG that I found that's pretty nifty, when you add it, it's just called alg orders. There's a few different options that you could tinker with on it. Volume filter, so you could filter volume that of certain orders. So I'll talk about that in a second. But what I do and the way I use it is just the out of the box option, which counts volume. So if you hover on, let's say for example here, I'm just going to freeze the screen there, on one of the candles, what it tells you is the buy orders at each price level, and more importantly, what actually traded on the left, 164, versus what was displayed. So 116 is what, and this is all CQG. This is what they do.
You know, I don't mean to interrupt you because I didn't even know what this was. When you first told me about this, what happens with me is I'm like, well, it's just another tool. And then he mentioned the word iceberg, and then I perked up and I said, wow, that's interesting. And then you mentioned, and I know you're going to get into this, highs and lows when he's looking to fade, what you're looking to do. That's what perked my attention. Not was the fact that there's this tool, and not that it's this algo thing. I dismissed it. And then when you typed in iceberg, I think it was last week, that perked my interest, because that's like, well, that is important then, especially when it might be a bottom or a top. Now this is even perking my interest because I didn't. Okay, so this is cool. The resting bids showed only 116, but 164 traded on it at that price level.
Exactly, yeah. And as you can see, some of them are showing 654, but at 67.5, 1200 went at that level. So you're starting to see some hidden volume. It exposes some hidden. So when it's called alg-ord, you think it's like an algorithm, and when people think algorithms, they think like that's the guys that we're trading against. There's a lot of misconceptions out there about algorithms, but all it shows is icebergs, basically. So I was going to get to how I use that at highs and lows, but there's some more information that you could drive from it. Look, it tells you bid volume total that went through on the iceberg front, 3,600. And if you scroll through the red side, it actually tells you ask volume, and it uses a negative number so it can plot it on a negative scale. But that's how the actual indicator works. It's pretty cool stuff.
Wait, go back to that. So let me just stay at one price level, the big imbalance, which is what? What's the biggest imbalance on the buy orders? Not for the footprint. So the footprint is what actually trades, right?
Exactly.
And this thing, if you go up to the buy orders, stay on there.
Yeah.
I'm under your yellow, and I'm going into the one the 1244 by 654, 67.
Right.
That means what? 1244 traded, but it never showed more than 654?
Exactly. So it detects that for these 1,200 that traded, only 654 were actually shown on the price ladder. And I asked CQG how they derived that number. They said it's a proprietary algorithm they won't tell us about, blah, blah, blah. But it sniffs it out and it kind of follows the volume to aggressive buying to selling. And what actually gets filled, they keep track of that. So 654 was posted, but 1,200 got filled.
Well, because I can see in any one moment I could understand that. But because 67 halves go bid offer several times during the sequence, they must have something that just takes a mean average and say, this price never showed more than 654.
Exactly.
Not a total of 1244 traded, just more than meets the eye is essentially what we're going for without trying to be too perfect.
Exactly, and I think what they probably used, and they haven't told me exactly what it is, but I suspect it's something that counts time intervals. So if you're releasing 20 lots at 5 millisecond perfect intervals, the human hand can't do that. Even Anthony's clicking on the ladder can't get to that kind of scope. So I think that's what they use to feel it out. But yeah, you want to talk about how it actually works and what?
Yeah, well, on the lows and highs, because I wasn't interested in this as you're talking about it until you said iceberg and until you said lows and highs. And I know the delta would show this too. If you get a big influx of delta and the price doesn't move, you could tag as that being icebergs, right? There's more price, there's more contracts trading there, but price doesn't move. And this is another way, again, what we always are doing here is another way to look at the same thing, but show it on when you're looking to fade, what you're looking to have qualify the move off the lows or the move off the highs.
Yeah, for sure. So here's where I start. So this is a 48 PNF. You can see I got some resting offers up here to try to tackle this level here, these 74s. I've been waiting for them all day, haven't come yet. So first of all, what I do is I start with a level. I look at a level where there's a sell imbalance up top with some high volume nearby that we haven't traded through yet. You can see that qualifies for that trade idea. So what I'll say here is we could get up here and continue higher, but I think first we pull back. I'm looking for 2 to 3 point max. Like 3 points is really on the high end. More 1.5 to 2 point winners on these trades. So what I first start with is establish a level, and then I'll flip down to 24 PNF. I start to identify something a little bit more minute. So as we go in here, you got to move it with the control button. You can see 74s haven't been traded in a long time. So just based on the fact we haven't hit those 74s in a while all the way back through here, I kind of dismissed the 24 PNF. And eventually I worked my way through to get into a 4 or a 6 PNF. And let's say that level, the 74 is right here. Let's say this is the 74s that I'm waiting for. So I have resting offers that you guys saw on the chart, so I'm waiting for the price to get there. But as we approach the price I'm waiting for, I cancel those orders. I just have them kind of as a reference marker for myself. And then I try to work the trade manually. So here's what I look for. If this is a 74, let's say these 69s or 74s, and we've actually rallied into there, what I'm looking for is some iceberg activity here around that same resistance. Because I've already pegged it as a resistance. So if it's going up and I'm seeing here there's a ton of people looking to buy, but they're not posting good buys on here. They're posting lower bids than they're actually getting filled on. There's a lot of buy interest, so I say, all right, the buyers on the way up have run into a bit of a resistance. So wherever you see a high amount of iceberg orders, and I use this analogy with Anthony on Skype, it's kind of like the Titanic, right? You see the iceberg, you hit it, you're going to stop for at least a little bit. Titanic, it's sunk, right? So what I'm looking for is for that Titanic to hit the iceberg and go down. And that's the same idea. So it's going up, it's rallying. You see a lot of activity. That ends up being high volume. There's hidden orders getting transacted. And once it fails at that level on one rotation, I never sell the first rotation. So here's what I mean. If it hits that level and curls down, I don't chase it, try to sell into it. I say, all right, let it come back into that level. It's a good chance that if there was a lot of volume and a lot of activity at this price point, as indicated by this algord, then it'll probably roll over. So what I do here is I'll start posting some offers here and really tight stops. Literally, the way I've noticed these prices failing off resistance, they go up, they come back in, another bounce, and they tend to go one tick higher just to rope some people along before rolling back over. So that's what I'm looking for. So basically, I'm looking for price action to rally into one of my resistance levels that I'm going to fade. And once it starts to approach that resistance level and these algo orders start to build up, whether it's sell side or buy side, it doesn't matter. At the end of the day, it means a lot of people are starting to put emotional capital on the line at this level and they can't get it to go.
Can I add something? Can I go to a 4 peanut?
Yeah, sure.
So you're at 6. Go to 4. Let's
Here's
pretend
4.
that's the same level.
It works the same way. So on the downside, look, it's coming down, coming down, hits these VWAPs, boom, you hit a big iceberg, some activity here, and it at least tapers off that sell-off.
Well, here, what I was thinking is, what I looked and found interesting is that you get a short 4 PNF bar, but a long algo bar. Yeah.
Yeah.
So it makes sense that the longer the bar, the longer the algo. But when you get a long, something that's different. So a short 4 PNF bar at a high or resistance or at a low or support, but that thing to fire up and to get a lot of influx of volume on this proprietary whatever that's signaling that this is the stop, right? This is the qualifier. And I don't see, let's see, where are you at?
Let me just show you a few more 4 PNFs. So, I mean, we haven't had too much trending market in today's environment, right? But like you can see here, here's a good example. It's going up, price is rallying. We're starting to hit the 69. And 69 I had pegged as a resistance pretty much for the whole session. And it hit the 69, and then look, this PNF, the rotation, it actually shows you a lot of buyers are starting to get long here with iceberg. You see that? So you got, if you have more green above the zero line than you have red, that's more buying on iceberg orders. So the question here is, are these people going to get stuck long? Right? And that's what I'm looking for. And if you start to see some things, here's my typical rollover in qualifiers. If I start to see it pitting this level and it can't break, see a lot of buying on iceberg orders or loading up. You see some stuck longs in the filter here, which is what I have at the bottom light up, and it can't go. You know what? At that point, it's worth 2 or 3 tick risk for a potential fade for me because you got everything huffing and puffing. It's not going. You see blue smoke coming out the tailpipe. It's probably going to roll over for a point or two.
Go down a little bit or go forward to real time.
Forward in time?
Yeah, so it does do a little, and it does come on.
Exactly, and it pops
That's
back
the one I'm looking for. Where if you go to the 24 by 329 bar, 3 back, 1, 2, 3 back.
Yeah.
One more back. 24 by 329. So right there, it seemed like it had. If you go straight down, it had a bigger algo bar than it did on most bars. That obviously is more volume and maybe showing you it's ready for a move. It's ready for its move and maybe qualifying a better win moment. But
definitely,
this is walk us back through, because you did it briefly in the trading room also on Thursday of last week, I think it was. The 24 PNF and maybe the 48, where you just take the simple high volume areas. Yeah.
So here's what I look for. So on a 24-48, it has to be a high volume notch that hasn't been traded before. So these ones here automatically disqualify because they've traded. But if you look up top right here, there's one that qualifies. So this is the 77 even. And above it, it's really nice because at 78, you got some nice sell imbalance. That 77, 78 zone on its own makes a really good shorting opportunity. So what I'll do is I'll look for that. If you're long, that's your target. And if you're short or you want to fade, you come in and you could try to fade that. And the last little bit, after the volatility has died out, I've been more of a chronic fader than anything else. I've been fading a lot. But that's how I use it. It's a 48 PNF. The next upside fade level or target would become 78. And we could see why. 78 between 77. High volume notch, sell imbalance, that's a great resistance. On the flip side of it, if you go back, let's say, look how nice they work, especially on the 48. So if we go back here and you start to see some resistance right here and it starts to roll back, you're saying, well, if I'm long, where can I find some support? And you start to look for imbalances and high-level notches. And look how nice he kind of foreshadowed this area for the bounce. Right? And that's all I'm looking for. And, I mean, none of it works perfect. And then we went into this crazy sideways chop, and all I started doing, and you could, I wonder how I turn on the order. I just started buying these imbalances here. So I look for two things on 48 PNF, high-volume node and buy imbalances or sell imbalances for support. That's it. That's all I'm looking for. So sell these 68 halves, buy these 50s all day long.
And you're looking at an upside target of the previous high volume node, right? Sometimes, if you're unless it's too far away.
Exactly. So I mean, here in this example, considering high volume starting to pile on around these 57s, we know that'll probably end up being some support. We can try to rotate, move higher, but it doesn't mean you're going to buy it here and wait till you hit 77. Say I'm not selling until it gets there. It just means that that's some good upside targets for you. And eventually, what I start doing is buy, hold for a little bit, and then when I get that target, I'll fade. And then I see where the bounce comes back into another high volume node and ride it up. But the way you could apply this, look at a 48 PNF, because a 48 PNF is 12 points of rotation on each. So each one of these bars, in order to print a new one, is 12 points on the ES. So it eliminates, it looks like chop, but and the beauty of that chop is that you have targets that are very precise. I'm looking at 77 right now up here, and 75. These are the two I'm going to try to fade.
It's just another way to look at the same thing, and it reminded me of the other George, the old George, who's back around. I'll talk about that later, but he used to use the 500 delta reversal bars and find the high volume area within those delta reversals, and it's just another perspective to say to yourself, listen, I'm bullish. Why the hell am I bullish if we're still below these high volume bars? Let me take the screen back and show you that on my chart.
I was going to mention one other thing too. For you, when you talk about your alert levels based on stuck longs and shorts, a lot of the time when you call those levels out, it actually ends up being the exact same levels I'm watching, because the high volume is what actually creates those stuck traders, right? So it meshes in really nice.
No, that makes sense. That makes sense. It's the imbalance at the high volume that is that extra dimension than just high volume.
Exactly.
What happened here? Let me take this. I'll give it to you. Hold on, George. Don't do anything. Let me take it back. Show my screen. I'm showing the wrong screen. All right, here we go. 6. You guys see my screen? Okay. So where did my chart go? Oh, here it is. Well, I put the delta profile for 10 days back here. And so you could see that 74 area. Is that what you were talking about?
Yeah, 74.
There's also a big buy imbalance on our delta profile, 73.5 to be exact.
Exactly. That's what I'm looking for too. It's 73.50 all the way up to 74 quarters.
So these are 24s, and so the market goes down, comes up, comes down, goes up. But you got to remember, let's use a different pen color. you got to remember that in a 24 or 48 PNF, there's a lot. I mean, this is a rotation, but there's a lot of rotations within these bars, a ton of them. And that's
Yeah.
why it's just about perspective. And what I think is, I remember George saying this a long time ago, and it's really important to beat this drum is when you're looking to get long and you look at, let's say, a 24 PNF or another periodicity bar that allows you to take a helicopter look, you could say, hey, you know what? I know it's not great to wait. I'd rather buy it closer to here, but at least I'm above a couple previous high volume areas from these 24 PNFs. So I don't get stuck buying a downtrend. Let it get above some high volume areas, and then you could be more helicopter bullish and then look for drilling down to qualify. Play it from the long side is, I guess, what I'm trying to say. And the reason why we had such a tough time getting through here, I would imagine, is we had, and then I also put imbalances on here where you get like back-to-back blocks are some important levels on a 24 PNF. But just to see, you always got, you can't get away from drilling down. There's just no way to get away from drilling down and qualifying something. But when you could look back on, well, why would I look to be doing something and staying away from the big loser? What I try to help people the most with is not making money, but not getting killed and giving back their profits with one trade or one day because they're caught in that trend. They're doing something that's worked for them, and it's just not working on that particular day, and they give back a ton of profits and then some, and then they're back at zero. That's what I'm trying to help people the most with. If they can keep them above zero, then they have a chance to continue to build. If you keep going 3 steps back, 3 steps forward, 4 steps back, it's hard to keep getting back up and getting back up. I'm trying to prevent people having big down days. And in order to do that, we avoid the weakness. We play to our strengths, but let's avoid the weakness. And I was talking to a guy who's a scratch golfer the other day, and he says, we don't try to hit the best shot. We try to avoid hitting a bad shot. That's the professional golfer mentality. I don't want to be in the hole. Obviously, I'm shooting for the hole. I just don't want to be in the woods, right? I'm shooting at areas. We're playing areas. So trying to help people just get away from falling into their bad habits of fading is great, but fighting is disastrous. And you got to have better perspective. So the other thing I started talking a little bit about in the trading room is no one should tell you you're looking at too little or too much. You should be able to determine that by your results. If your results are if you're not looking at a lot of things and your results are poor, then you should be looking at more. If you're looking at a lot of things and your results are poor, then you're looking at too much. If you're looking at a lot of things and your results are good, then you're looking at the right amount. Don't let anybody tell you you're looking at too much or too little other than your performance, right? Because we do get trapped in always looking for something better, something better. It's just different things, different looks, different periodicities click for different people. And to George's point earlier in this session, show a chart and we'll make it better. And that's important because there's always something better we could make out of something. The only regret I have of showing the how to get the alert levels a few months ago was I should have done that class months before that. So all the great things that came from the delta profiling and understanding delta. But let's go back to a couple things like I highlighted these 2 bars. And this is a down bar, but it's a 24 down bar, right? And then you could see, let me get rid of some of these vertical lines. Let's get rid of all of them. You could see that this market lays out a couple thin spots on the way down, right? You could see that it lays out this thin spot. Now here's what just your prototypical educator will say. Hey, look how great this thin spot worked. You could sell it there and you could buy it there. You could have risked up here and how much money it would have made. What they don't tell you is, yeah, but it just blew through this one and it just blew through this one, right? You couldn't have had that cookie cutter, sell it there, buy it here, and make money. But I could guarantee you that the market on a 4 or 6 P&F, if you know how to trade, gave you plenty of opportunity to sell it and probably make money in here. Because remember, there's a lot of rotations in this up bar. It doesn't just go straight up. But if you held on to a trade because you're looking at a long time frame periodicity, whether it's a 24 or 48 P&F or too long of a reversal bar, all you're doing is letting profits turn into losses, profits, losses, profits, losses, profits, losses, and then finally you lose money. And you're like, what happened? So you didn't trade it. You just wanted it to work by doing one thing. Sell it here and buy it down there. Well, that doesn't work. Even though this area worked great if you looked at it and knew how to actually trade it. And it gave you time to say, hey, maybe it isn't going to work, and you cut your losses, right? Then it's not just the big winner that works and makes a great level. So this area right in here is around 64 even. And this is a down bar when it was put in. So I could almost guarantee you when it came back up here the first time, this was a good level to sell against or get out of a long, whatever. It was your best levels are going to be in there. So let's take a look and drill down into a 4 P&F. And I think I set it to near the right time. I made sure it worked before I said I guarantee it was going to work. I'm just joking. So this is, I think this is what it looked like on a 4 P&F on the way down. But look when this market comes back to 64, the 64, 65 area, how well it comes in and then comes out. This is overnight, but an example is an example, right? So even though if you just look at a 24, it looks like it just keeps cruising right through it. It doesn't. It comes off 3 points. 3 points in an overnight session, 4 points in an overnight session is a huge move from down here, from up here rather, to down here. And then it plugs through it. But could you imagine if you're just a trader that looks to play these for bigger points and you sell a great area and it works to the tune of 3 points, you don't take profit and you end up getting stopped out for 2 points? And you could say to your boss, yeah, but it was a 3-point potential for only a 2-point profit. Boss, that's a good win-loss ratio. I'd throw the guy out the window. I say, you let 3 points of profit in an overnight session turn into a 2-point loser? You suck. So you got to know how to trade it and not just play it. And then it comes up in here, and I think this is the example of those. Let's look at it, of this level right in here working. This level, if you take it across, is in the upper 60s, right? So take it to a 4 P&F. What does it look like when you drill down? It goes right up into it and comes off nicely for, again, a 4 or 5 point move off that high. But you got to know what to do when it gets into, you got to have a great level, and I think we all have that. And then we all got to work on trading the great level, finding another slap in the face moment for when to trade it. So I don't like this algo bar, and I'm not going to pronounce it the way it is, Algord or whatever it's called. I don't like a long one with a long bar. I think every long up bar is going to have a long algo bar. It just seems that to be the case. So that doesn't show me anything. But if I can get an unusually longer, fatter algo bar, it's not fatter, but than the bar that it's representing, then I might have a top in, right? Then you could mechanically then maybe give yourself a way to qualify a level to just sell it in real time. Because I know a lot of people don't want to get fast enough. They want something more mechanical to qualify a level. So if you're good at understanding levels and why they're levels, and then you're trying to get good at trading the levels without trying to be as fast as you think you can't be, then you can mechanicize it by saying, hey, there's a lot of interest that is unbeknownst to the market. Now remember, this is still overnight. Yeah, a little before we were to open the room. And maybe that's your moment to get out, and then you risk above whatever the top of the move is. And there you got your trade, your plan, your setup. Good level, good qualifier like this. and then you take a shot. And this doesn't have to be this particular proprietary thing. It could be a lot of the delta stuff that you use. You see an influx of delta, and price doesn't make a higher high, right? You get the delta you're looking for the delta to spike up, and it does, and we don't go higher, and that's a qualifier to sell it. But this does a little bit more. I don't want to say more as in better, but does a little different calculations than just aggressive buying, aggressive sellers, because that's what the delta is. Aggressive buyers minus aggressive sellers gives you a delta. Where this is taking into consider what's offered and what actually trades there, what's bid and what actually trades there. And when you get more than meets the eye, then this bar is going to get longer. So those are your, in my opinion, your win moments to fade and take a shot at selling resistance or buying support. So it all comes down to perspective. So I had a bullish perspective, and I got short because the yen did something, and I made the loss very minimal later on in the morning session today because I knew I was against my overall perspective, so I managed my risk accordingly. But again, you could find a lot of great details when you drill out and in, like good targets where we're probably going to have a tough time getting through on the downside. So you play that really nice level that the 24 showed you, but you know that there's a chance that it holds this level. So you're not too much of a hog trying to get the damn thing through there if you are short at a decent spot. So your targets become better. And you don't fall as a victim, and I hear this all the time, of not knowing when to get out. You fall victim to letting winners turn to losers, or not being able to it's arbitrary to you, and random. This isn't random. You guys see thin spots hold all the time. You could take this 4 PNF. I'm sorry, the 24 PNF. Let's get back on the 24 PNF. And you could wait for multiple, if you set it up and say, if I get multiple boxes to form, I mean, that's maybe that's the best level of all time. And the market comes down, trades it, and goes up. Is it that easy? Nothing is. But this is showing some really nice imbalance. You probably should have that on a delta profile anyways, but maybe you don't, right? And this just allows you to take a bird's eye view. A bird's eye view is the best word for how to jump in and out so you're not always a victim of the noise. But have perspective as to where we are with these purple. These purple levels are just high volume areas. That's it. A lot of what George did with his reversal bars. It's like, well, where are you at? I think we can get some juice if we can get, if you're trading down in here and you know that the previous high volume areas from the relatively not too far past are up here, then you want to say, I think if we can get above these two guys, I'm really comfortable being longer time frame bullish because we're finally getting above, again, some too high volume nodes. And you could have said that if you come back in here, and not just because it worked, but because it's giving you better perspective of where you're going to feel more and more comfortable. Getting above for the first time, it's like breaking some sort of trend. You're breaking where it was popular, right? You're breaking where it was popular from before.
Yeah, Anthony, I thought I'd throw something in here.
Sure.
Since you made the mistake to not mute me yet. Another thing we could make a conclusion based on that stuff is I like to follow those high volume nodes for direction as well. So if high volume nodes are consistently occurring at higher levels, that's probably an uptrend. And if you're looking for a place to buy, then look for a previous high volume node and then try to get in there and execute your trading plan. Because all this stuff, the over level, when you look at it from really 24 PNF, you can't really trade off of it, but it's really good for location. I always use the analogy of hockey. Like, you follow a guy, you know when you need to get on when he gets off the ice. But when you're on the ice, what the heck are you going to do, right? And that's what trading is all about. You're there, you have your shot. and I just work that area.
It's harder. You're right. It's harder to follow when you're actually on the ice. And that's why, and that's an awesome analogy. My son's playing hockey, and the parents who probably never played, it looks a lot easier than it is. And their perspective is different than their kid's perspective. Why didn't he just do this? Why? Because he's on two blades on ice. It's slippery out there. That's why he can't just run and get the puck. It's two sport. Hockey is unique with analogies because you're learning two sports. People don't get that. You're learning how to play hockey, and then you're learning the sport of actually skating. Like when people learn basketball, you already know how to run. You just got to learn to play basketball, right? You already know how to run and jump and things like that. Baseball, now you just got to learn baseball. But hockey, think about it. You have to learn how to play hockey, but before that, you have to learn how to skate. You're learning two things, two sports.
Definitely. And watching something doesn't mean you could do it, right? Like one of the things I remember when I was a young kid, when I first went to watch my first live hockey game, it's like, wow, these guys are fast. It looks so much easier on TV. And you're like, you really notice how little time they have to think or do anything. It's the same idea here with trading, right?
Yeah, that's why you got to speed your game up. You have to speed it up by doing different things and doing different exercises and gaining perspective. And what works for you, the concept will work for someone else, but there's a small tweak with a periodicity, and that's why the changeover of a lot of some of the market delta charts is not the worst thing that could happen. It's the best thing that could happen because it gets people in a position to have their mind open to some things that might have been very similar to what they're used to, but it just worked better for them. Another way to look at the same thing. It's very powerful. Different things said by different people click for different people, different looks at it. There'll always be help when you keep an open mind. And if you're doing this in your success, you're doing that not because you figured it out, because you have an open mind through the whole process, period. I think that's kind of what you said late last week that I was trying to get to, and I couldn't remember, was having a bias based on these things, right? They're closing higher and higher to kind of develop a trend.
Right, follow the trend on the volume nodes. Fade them when they're really high up, but yeah, mostly you got to follow the trend, and it's been working well for me since I started implementing the 24 PNF. I found I've been a lot more disciplined because sometimes you trade the 4 PNF in smaller time frames, and you get caught up in the chop. You're like, oh, I should buy now, I should sell, and you kind of become victim to the price. But when you take a step back and look at the 24, look at the levels, you just mellow out. You're like, okay, I can be patient and wait for some levels to come versus trying to force things, and that's what's helped me with.
That's a great way to say it. It helps you mellow out. And, even though that's what I'm trying to help and tell people, you should follow the market, but you don't have to trade every opinion the market's telling you. It should go, because if you do, then you're going to get chopped out. You're going to get chopped up when it's choppy.
Yeah.
Every time, because you're trying to buy when it's bullish, sell when it's bearish. You should have an idea it's bullish or it's bearish. That doesn't mean you have to be long or short, though. And what Georgia said is this keeps you patient in picking your spots. And maybe it tells you to turn your machine off. You're done.
For sure, yeah.
Usually, again, whatever's intuitive, think of the opposite and implement it. What would be intuitive for a proprietary firm if guys that in the first 2 hours, the guys who are up, let's say there's 10 guys and 5 guys are up, their P&Ls are up on the day, right? After the first 2 hours of the session. And the other 5 are down. Intuitively, what would you say? Who should stay? The guys that are up should stay intuitively because they're trading well. Stay. Guys who are down, cut your losses. You guys are done. Come back another day. Intuitively, that would be what you would think would happen, but it's exactly the opposite. When you're up money, you're anxious to get out of there. When you're down money, you're anxious to get it back. So the guys who are down stay and the guys who are up are gone. I guarantee you the guys who left the earliest on a Friday, especially on a Friday, were up the most. They didn't work, their work ethic wasn't worse. They just made their money, maybe for the week and for that day. They were done. You always wanted to be out of there, which showed that you had a good day or a good week. Now, intuitively, you'd say, hey, you're making money, you're trading well, stay. Doesn't work. Whatever's intuitive, take the opposite when it comes to trading, and the opposite of that intuition will work. Hey, just think of this, too. Here's another example. How many times it's happened to me? Millions of times throughout my career. The trades you liked the least work the best. The trades you love the most are just ball busters, even if they work. And the ones you're like, I don't know if I should take, man, I should have had more on, right? Like how easy that was. And the ones that you love, that beautiful level, everything lined up, boom, you take it, and they slap the crap out of you.
Yeah, those are the ones that seem too easy, right? It's like, oh, everything's lining up. This is a great trade. I'm going to put on more size. And when it becomes too simple and you're seeing it that easily, so is everyone else.
There you go. And you put on more side as a loser, but then when you weren't that confident, you put on small side, and that was the winner, small size, and that was the winner, and then you get backed into, my winners are with small size and my losers are with big size. I can't get ahead. I got to be 80-20 right, and nobody's 80-20 right.
Such a cruel industry. You know how many keyboards and mice have broken before I kind of figured that concept out? It's crazy.
Listen to Dan Rudman. He's a prop guy I traded with Brad, and you guys are familiar with Brad from these Edge meetings. If you go to Futures Radio, he interviews a lot of traders and a lot of people in the industry. So Dan Rudman, I never knew Dan went to Princeton. He was a pretty smart guy, but I knew he was smart, but not Princeton type smart. But anyways, he's one of the better traders I know because he's much bigger than I am trade size wise, and if someone's bigger, if they trade bigger than me, they're better than I am. And I could have better stats than him. But if he's trading bigger and making money, I think guys who trade bigger are going to be better. Period. I'm humble enough to know that. But he's one of the bigger traders I know, and he trades a lot of Euro stocks. But I bring him up because of he always talked about how you never master your golf game, and you never master anything. There's always the challenge, and it's the challenge of a new course, even if you got good at one course and those holes and you play it well, there's always another course that's going to screw with you. And that's like waking up to a new trading day or new trading week. But if you're not consistent, you're never going to be able to master. But I bring him up is because he was very analytical too with his review. And he said he was 55, 60% right. He wasn't better and bigger because he was 90% accurate. He just knew when to press. You're trying to get more accurate, but you're not trying to get 90% accurate. I think that's what a lot of people are trying to do with their mechanics. They're trying to get 90% accurate. You're just trying to short time frame trade your losers and longer time frame trade your winners. It's much easier said than done, but then so is everything. Everything's easier said than done. So I think that this was a good session. I think it gives perspective. I'll flip back to it when I'm looking just to see where we are in referencing these purple levels. It'd be interesting to see what the market was doing when it was trying to get through this one. So you had this level, all these levels are stair-stepping up, and then this one is weak. But if you can get back through it, maybe the lid could come off because you had, an uptrend. You're always going to get a pullback as soon as you can get through that line of demarcation, which is like you got an uptrend. All right, bears, they got it. Bears think they have it. You shook out enough for the longs, and that's fine. But if you can get through a point, then maybe the upside becomes easier, and that becomes a better win moment. Remember, you're always looking for better locations, and a better location is defined by that SOB going your way ASAP. You want it to go your way. The faster it goes your way, the better the location. George, thanks for your help. I appreciate it.
Yeah, thanks for having me on. Have a good day, guys.
I'm going to end recording, and we'll upload this, be in track 4 for you guys if you want to watch it again. Just keep an eye on your profiles, your Delta profiles. Just make sure you have them up and then gain perspective. You know, what I like about this is you can go from 24 to 12 to 6 to 4 and drill right down in the same chart. Whatever periodicity you're using, use perspective with it. Go ahead.
Are those greens buy and balance? So you're just highlighting.
It's proprietary.
Well played. All right, okay.
No,
I'll ask the genie.
Genie, yeah. So if I let me I went a 500 imbalance on it. So you go to this highlight and it's buy imbalance, sell imbalance. The threshold actually is 1500 because you don't want too many of them.
Yeah, it'll litter the chart.
So it depends on the periodicity what this threshold would be. And I played with it. But I got it over here by throwing these over. And you could play with buy volume and sell volume. I just went imbalance and highlighted it green and red with a 1500% threshold. And that's how the green and red boxes were formed. It doesn't.
I think that's a great helicopter chart. I think it'd be very useful for a lot of people. I'm using it as well, so thanks, buddy.
Right. No, you're welcome. Well, that's the thing. It's just you introduce something and people tweak with it. And you know, for some people, this won't be useful and they won't use it. And that's fine, too. There's no right or wrong answer. I'm just trying to look at, I think that when you get, here, I'm going to tell you this, and I'm not sure that this worked. I'm guessing it did. You could see this area, and this area was not, so you remember, this is an up bar on a 24, and this is a down bar. But I guarantee you that this area right here where these two green boxes were formed when it shot up and formed this bar in here. That's why you got to be careful. It's not like, I don't think it got thin in here on the way down, so it would have been red. So I think when it came up in here, it got fast in there, got fast as it transferred over to there. And I bet you wouldn't got your face ripped off if you seen this and you said, I'm going to buy a pullback to this thin spot. I bet you bought a pullback. I bet you probably could even have made money and it had a little bit of a rally before it broke. And if you take this price across, it's these 62s. And this happened on the 14th at around 2 o'clock yesterday. Not at 2 o'clock, but around then. And the price was what, 62? So let's go to a 4. And let's get rid of the drawing. And what price was it, 62? Let's see if we could find where that left off. The 14th. We're going to have to go to the 14th here. What did I say? 2 o'clock, right? Around 2 o'clock. I would imagine this is when that 24 left got fast. I'm thinking. I don't know if that's... No, it was 62. I'm having trouble knowing when that 24 shifted, that 24 PNF. We know it's shifted at 62. I bet it was in here. So I bet you that if you said I'm going to buy that 62 back to here, I bet you don't get your face ripped off. And then after the 2 o'clock hour, you know, if you understand perspective, it came down here a bunch of times. If you did lose money trying to buy it to the 62 even area, that's your fault. Because it had some upticks a bunch of times before it fell out of bed and then would have worked against you. Make sense? So even if you had good levels, a lot of times when they don't work, they give you plenty of time to say, get the hell out. How many times are you going to try to buy this area, 62 even? And it has, you know, 1 rotation, 2, 3. I mean, 3, 4, maybe more. You could almost say, I'm going to get bearish for crying out loud. This is not going to hold forever. Sure enough, it weakens up in the last hour yesterday. All right, guys, I hope today helped. It'll be uploaded within a couple hours.